The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Thank you to all our great hosts this morning. Really terrific. And of course, today being Thursday, we just go right through. We've got a closing with Andy Hecht. And Andy, thank you for that webinar. Another great learning experience. Wow, I tell you, there is so much to learn. You know, when you're an expert in your field, you just, like Andy is, you just keep elaborating on stuff that us laymen just have no clue about in the commodity area. So thank you. It's just like when Tom talks about the gold stocks and all. I mean, we just listen and we say, wow, who knew? Who knew? It's great. TFNN, wealth of information. Let's hope that we can continue that in this hour. The Dow, the S&P, you're looking at, I thought for once I'll actually start with this chart because I always forget to show it until later. I show it in the den, but I don't show it in the general public. So what we're looking at here is that the E-minis are down 17 at 2024. They have broken serious support levels. You remember we were looking at this yesterday. We made an Elliott Wave 5 down at 2035, and we had that big spiral to the upside. And I drawn in a circle here and a circle there, and I said, if we had to move up, and this is not going to be a single leg A up, and it holds support, then this is the target area right here. I think it was 20, I think I said it was 2052, 2054. It went way above that at 2 p.m., right there within 1 minute. Oh, sorry, one bar of this 10-minute chart. And then it plummeted right through the question mark that I had right there at 235 and went down to 2035, down to 2030.75. Single leg down, bounces up, makes that H pattern failure, does it again, and then went sideways this morning, had a little mini peak A, B, C, D. Remember, that's what you expect in the Chapman wave, at least to D. Look, there's a D, there's an E, there's a D, just slightly higher E. There's a major D at 2057, at just before 2. Then it makes this top around about 8 o'clock, and it pulls back. And we're now trading. We've just hit a low today of 22.75. Most of the damage, at least for this period, should be done. Should be a little bit of a rally attempt. Remember the rule of the Chapman wave dreaded H pattern, the lowercase h, is that within one, maximum 2 bars, if you break the left side low, you must close above it. And if you close above it, having gone below it, then you can rally to the next level of resistance. That's the 2027 9-period exponential. No, that's not the 9 periods. I think I'm forgetting right now what it is. It is right here, 18. I thought it was 18, right. So it's the 18 period right here, the orange. No, yes. Blue is, I better get this right. Fast, yeah, the faster moving average here is the 9 period. That's the orange, and blue is the slower. That's what it is. So you've got within another 1 10-minute bar to close above 2023.75. Let me run the numbers. We're in a sell mode, being in Chapman wave sell mode. This is the anniversary. Today is the anniversary of the major top in the Dow at 18,351. I'm doing a webinar 2 weeks from tonight. I'll get into that. There's plenty of time for that. But boy, did I sell that? Yeah, we've been short since this last top. We did have shorts before, had longs, we had shorts, but the nicest position we've had lately is one that we've added to our short positions from the exact high. In this time, hey, you never know. That's working nicely so far. Now, let me just go through a bunch of things here. Let me move this away. Oh, I'm being covered. Okay, doesn't matter. What we're looking at is the Dow is down 184 at 17,341. S&P is down 20 at 2027. The NASDAQ, this is not so good. This is the comp index, 2,000 stocks, down 53 at 46.65. The VIX is in the 17.37. You know, I've made it real easy. I've discussed the VIX for months, and I said in the high 16s, starts as triple-digit selling, going to the 17s, that gets maintained. The trend doesn't even know that the market's open today. Actually, someone forgot to tell it to wake up because it's at 0.65. That is pathetic. It's telling us a story, but we'll get into that a little later. As I say, the E-mini is at 120-minute chart. The E-mini is at S&P is down 17 in leg E to the downside. The E-mini is in A, B, C, D to the downside. It's hitting a trend line support. That better support better come in right away. Okay. Let me get this away so that you can see different charts. Now let's go to the gold because I've been talking about for 2 weeks now. I've been saying I believe gold is going to consolidate more than 2 weeks. While the dollar rallies, gold is down 23 at 1251. This is a peak in the weekly chart. By tomorrow, I don't think we can break above 1306 to reactivate the buy signal. I think on the short-term basis, we're in a sell mode in the daily chart. The weekly chart hasn't even given a sell signal yet. It's close, but I think that we're going to have a digestive phase in the commodities. Crude oil is in the same category. CL is down 132 at 47.46. I believe this is going to be peak E. Look at this beautiful left side, right side price time match that we've got right there. And I believe that there should be a consolidation. Now, do you go short? I don't know if I'd go short crude oil right here. 3 days ago, I actually had it in my newsletter, and then I just blipped it right out. We were going to go short gold. I just don't know if I want to do that. I want to keep thinking major trend is still up, at least for now. If there's a bounce in gold and the dollar, let's look at the dollar, and then we want to go to calls. We're going to go to DXY. People are waiting. The dollar is down. It was up much better. It's up 6 cents at 95.14. This is leg C in a left side, right side price time match. Now, what's really important about this, 95.31. So let's say the current price is up 24 cents. I'm looking at this and I'm saying to myself, within the context of the dollar chart, the monthly is going to be so important. We've got trough E goes to peak A, B, C, D, E. And the E is where you expect a sharp sell-off. I think this is just a little intraday sell-off. There might be a bit of a bounce in gold. Let's see, gold at this point. Yep, still down 23 at 1250. I think the dollar has more to go, but I don't think it's a major buy. We're long via an instrument, dollar-rated instrument, but I'm just treating it as a trend change. And I'm not treating it as this is going to be making us a fortune. I just think there's a rally that's going on while gold consolidates. Let me make it as simple as that. And just for those of you who trade the euro-dollar currency pair, look, it's in leg D, testing the 200-period exponential moving average support. So there might be a little bit of a bounce, but the weekly charts, there's no consolidation going on in the euro-dollar. Well, let's go to Ben in Tallahassee. Ben, how are you?
Good, Basil. How are you?
I'm very well, thank you.
Great. So first question is the DIA in the daily. Do you have that as a trough?
F.
Could you tell me what you have? F. Okay.
It's not a trough. It's still a leg down. You have to wait till tomorrow before you can. Yeah.
Right. But this is. Do you feel real confident in an F, or do you see it as a possible alternate?
No. I think this is an F. At this particular. Can you hold through the break?
Sure.
Okay, because I got a left side price side time match which says that this is going to be very interesting. I'll be right back with Ben and Scott straight after this break. Now it's down 187. Basil Chapman, Tiger Technicians Hour. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So we're looking at the Dow Diamonds, and what I'm showing here is that the diamonds are down 1.67 at 173.96, and there's a left side, right side price time match. If you look at this as the fulcrum, the high that was made on the right there, that's the fulcrum line, and the high that was made in the diamonds on the 20th. That's going to be very important. This here refers to what I show my subscribers every day when I write my report for the Traders Corner, but that was the high at 181.42. So 181.42 to today's low of 173.67. That's 7 points. Let's call it 7 points. That's that's quite a big percentage. But it turns out that the way up was equal to the way down. So this is going to be really important because within the context of what I do, I'm going to show a chart here that I show subscribers every day. And that is my 120-minute chart, actually not every day. This one I've been showing over the last couple of days because I wanted to show this pink 20 EMA line within the 120-minute chart. I wanted to show the shoulder, the head in the middle, and the right shoulder. I wanted to show the 17,399 low of March the 24th. That's really key. We've gone under it. Exactly the same technique that I was showing in the 10-minute chart, that if the price and an arch formation goes below the key left side low, it has just that bar and the next bar, but maximum 2 bars to break and close above, because if it does that, that says it could bounce. But if it doesn't, it says you're going even lower. So this is what I'm looking at here. This is a very key moment. And the reason why I said I'm treating it like an F, I could still go to a G/C, but I want to be ready for some kind of a turn because there have been matching movements. I don't know if I can see it, but if you go from that B- right there, in the Dow, it's moving, at 3:30 in the afternoon on the 27th at 18,084 down to this move right here at trough F at 11:30 on the 6th at 17,580. If I draw a line and I go like this, you can see that there's pretty much a match, like an A to B equals the classic lightning bolt C to D. Look, there we go. We're putting it in. And that can, oops, slipped out of my hand right there. And that takes you, in fact, we're a little bit lower. Yeah, in fact, that would have taken you exactly to the 17,400 level, and now we're below it. So it says that we're getting stretched, the rubber band's getting stretched, but it also says that this is a sell mode in the Dow daily, and that there's a real good chance with the move today, unless there's a spectacular options expiration spike to the upside, that there's going to be a sell signal in the weekly chart, and that's key. Am I kind of answering?
Yeah, I'm sorry, Basil. That was actually my bigger question. Is I'm looking at the monthly. Did it hit the 9 EMA this morning?
Let me see. I got a mouse that's doing its own thing. Let me grab another mouse right here. No, it hasn't. So the monthly chart has. I'm on the diamonds. Let me go to the Dow. If you don't mind, I just want to go to the Dow because
sure.
I've got a little bit better notated. Oh, I see what you mean. Yeah, it's interesting because the diamonds was still a little way to go, but the Dow.
Right.
This is exactly at 17,300. No, let me get it exact. I'm just guessing. I want to. 17,312 is the monthly 9-period exponential moving average support, and the low today is on the monthly, and the low today was 17,331. What were we 17 points or something away? Yeah. So this is a very important moment.
Yeah, that was my bigger question. Is you got the daily time match that you mentioned, but now even the bigger time frames, the monthly always trumps the weekly, right? So if we
in the larger time, well, if the monthly trumps the daily, we can't skip a one. We have to think of the weekly, which technically so far is still at 81% in the stochastic. I think it's going to go under, but the weekly chart still has a spectacular move to the upside. The technicals are holding, but they are showing signs of deterioration at this particular point as we're speaking at 11:23 on Thursday.
Once you consider, though, that if the weekly's above 80 and we're really close to the 9 EMA on the monthly, that we're at a pretty strong support level right here, right? Or not?
Well, that's what I'm thinking. But at the same time, the reason why I chose to do the webinar in 2 weeks' time is that we will have just completed the month of May. We'll be able to look at the chart, the monthly, see if it broke the 9 EMA. If you look at my GE, IBM, Triple M, and UTX quartet as an index, they have not been doing well lately. I suspect that a lot of damage is being done right now. I suspect that the dollar move up is not an intermediate term move. It's just a short-term rebound as gold and the commodities take a breather. And when everything comes together, I think that round about the 17,000, between 17,200 and 17,000 is where I need to start getting indicators that say we are getting close to some kind of a rebound. Now, the big question for me is...
Yeah, I guess I was just going to say, but by then, if it's down to that level, then we broke the key 9 EMA levels, right, in the weekly and the monthly?
Correct. And then what we have to do is say, how on earth, what on earth, is it even possible to make all-time highs? And my answer at this particular point is something is going to happen, because I still believe we've got the Japanization of our bond yields. Yields are not going to scream to the upside. Not yet. Later, I think we're going to look at inflation like we've never seen, but I'm talking a couple of years' time. But at this particular point, I'm thinking that there's going to be something, and it could be that the market perceives that Trump is going to be really good to bring in jobs. It's going to be something related to a speculation.
Maybe it'll be some obnoxious Twitter report from Trump that will skyrocket this market back up.
Well, yeah, this is people say this. I know people say this is the craziest market. Hey, I've seen crazier markets. I've seen crazier politicians. This is nothing. This is just the media pushing and pumping. I don't see Trump as the evil person here. I think there have been a lot of evil things that have gone on. So that's not the issue. The issue is the market.
I guess the bigger picture is I'm just trying to get my head wrapped around what could like you keep asking is what could accelerate this thing way back up above new highs.
I have some ideas, and those ideas are going to be extrapolated in my webinar.
Good.
I need the full month of May to be able to feel that there's confirmation. I can have confirmation. So we're
Very
on
good,
hold,
Basil.
but we've got a short to intermediate term sell signal in place, and then we'll deal with the next move if it's going to come.
Okay,
Hey,
great.
thanks for calling.
Thanks
Always
a lot.
great questions, Ben. Thank you.
Thanks.
Let's go to Scott in Safety Harbor. Scott, how are you?
Fantastic, Basil, and I hate to remind you of my prediction, but what did I tell you was the safe haven where I was going?
You were going to go to the agricultural area.
POT, yes, sir. It's
So
the only
you're
thing
looking at
standing-
potash?
It's the only thing standing in the field right now among all the carnage.
You're absolutely correct at this particular point, and it's a rotational
hold that
market. I'll be right back. Scott's holding, and Scott's looking at potash. Scott from Safety Harbor, Florida. Basil Chapman, Dow's down 161. We got that move in that 10-minute chart. Here it is. There it is.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 176. S&P's down 18. I just want to warn you that as long as the VIX index is in the 17s or even the high 16s, rallies are going to just be transitory. It's just this is a bear market right now, as far as I'm concerned. The daily is in a bear mode, and I'm waiting to know tomorrow afternoon at 4 o'clock whether the weekly chart is going to be going into a sell signal. Could even be an immediate sell signal to sell mode. We'll see. So let's go back to Scott and Safety Harbor. We're looking at POT, Potash, Saskatchewan.
Let me say something real quick, Basil, and I had
Yes.
to yell at a couple people I know today. Don't trade without putting stops in. There's no reason to be all depressed and upset about this market if you use your stops correctly.
100%
$10
correct.
stock, put 10 or 20 cents in. $20 stock, 50 cents, $1. I mean, to be sitting like I know people right now are sitting in X at $12 that bought it at 17 is ridiculous.
I get this all the time when people, not all the time, but every once in a while, someone will call and I'll be able to tell from their voice whether or not they just got into a stock or whether they've ridden it from 50 to 20 and now it's at 28 and they want to know whether it's a buy. And I always say, okay, you didn't put your stops in. Now you've got to learn how to put the stops in. I agree. So let's look at potash.
For some reason, it's a psychological thing with these people, and it all is about they're afraid it's going to get that little, heartbeat
Scott,
movement
it's everybody.
up and down, and then they're going to lose. I mean,
it's very hard to do. It takes a lot of time. It takes a long time to learn that lesson, and believe me, it's just really tough to do. You always think, it's going to come back, it's going to come back, it's going to come back. Now, let's just go through potash. POT trading at 16.34, up 28 cents. It made a peak A. Let me show you the low that was made. I'm not even going to put an up arrow. It doesn't deserve it just yet. So it's got a plus sign, which is always the start in my work for a turning moment. And I always put pluses above a D and an E and an F. And what happened is it went from the low of May the 9th at 1550 to 1684 on the 17th of May. Then it pulled back quite sharply under the 9-period moving average. Now it's above the 9 EMA. I don't think this is yet looking like a stock. It could, but just at the moment, that's going to, from the 1633 level, that's going to spiral up to the 1750s. I think there's still a consolidation going on. As short-term trades like you do, where you get in and within days you're getting out, just like Garo, who always calls and he talks about the SAR, and that is, of course, Stan, I always have to look it up. It's the parabolic SAR. As soon as it hits and then breaks the little dot, he wants to go long, and he goes long for a day and a half or something and takes his profit on the downside. That's exactly what I'd be looking at here. But this is what I'm looking at. I think you've got your eye on at least the area that has potential to bounce. It's peak A, B, C. This is a D that's pulled back. It has to break above 1647 to 1653. And I have to tell you, the way it's looking, it has to do it either this afternoon or tomorrow. Because if it slips a little bit between, it's at 1634. If it slips under 1622, it's just going sideways for a little while it rebuilds strength. But it does have the potential to move higher as long as it's holding above 16.
Yeah, I'm in at about 1610, and I'm not looking for anything big, like you said, just to snap out. Another fallacy or how people trick themselves when they don't put in these stops is, friends of mine will give me a call back 3 or 4 weeks later. Well, it came back, X came back, and it's back where it was. Well, if you'd put a stop in, you could have bought it at that lower price.
Exactly. Not only that, I have a whole thing. I don't want to go through it now. There's no time. But I just, when it comes back to what you were at, when you were expecting it to go high and it goes much lower, my rule of thumb is I do this, and I haven't had to do it for a long time, but I would immediately sell it. And even if I got back 5 minutes later, I got back in because it was a fresh thing. It wasn't sitting, wagging its nose and tongue at me. It was a fresh thing, and I could put in a stop. That's the most important thing. So let me do this.
Do a whole show on that, Basil. Really, it's so important.
Well, whenever anybody calls, I will. But I think so. This is my analysis with the potash. I think on the short term, it needs to get to that 1650, 52 level, and that'll be a good sign. But in the meantime, it's acting well for the market. It's up 1.91% when the general market's down 1%. So let's hold off right here because I think you're on the right track. All you do is you put in your stop. This is one that is working. If the market does have a rebound today,
15.95 stop in. So
Oh, well, that's good. Hey, thanks for calling, Scott.
Thank you,
always
Basil.
important
Thank
to hear
you.
from you. Thank you. So this is what I'm going to do right now. I want to show you. We went long a stock this morning at long. That is just a stock, not an index, and not a 2-to-1 short anything. This is a long at 39.30. It's trading at $40.06 right now. Why? Because it was showing tremendous strength all through the week as the market was going down, and I thought the risk was very slight. And then at the same time, I went long because bank stocks acted so well yesterday, but I was very suspicious. But I said, let's buy a small position of the XLF under 23. We bought it at 22.99. It's now 22.94. The reason why I did it is only for this, that if the rule of thumb, and I don't actually think it's going to be a rule of thumb this time at all. I think interest rates have very limited upside. There's an international glut of interest rates on the downside. It can't look like the Burj Dubai or no, Burj Khalifa. It can't be the single world's tallest tower in a desert, because all that's going to happen is that our interest rates will be under tremendous competition once again to go lower. Because of the competition around the world, and we will see money flow into bonds trying to get the yield, and that'll probably push the bonds down. That doesn't mean to say the Fed couldn't raise another quarter point. My thinking based on the Walmart. So back to the XLF. I don't know if this is going to work. In fact, I might just get out tomorrow at whatever it is. It isn't acting the way it should. I don't know. But I just thought, hey, it's in a peak B, holding the 9-period moving average in the weekly chart. If anything's going to move in that whole sector, the XLF, I didn't want to go to a specific stock. I don't know if it's going to work, but I just wanted to say some things are working, some things are not. I'm not afraid to go long stocks that are looking good. I am afraid to go long stocks that are making single leg moves to the upside. I hope that this isn't the case in this XLF, the financial S&P's financials. It's not acting well at all right here. It's almost at the low of the day. So I just wanted to mention that. I want to go to Tom in Plymouth, Massachusetts. Tom, how are you?
Oh, thank you, Basil. How are you?
I'm well, thank you. You'd like to look at?
Well, the dust. I got out this morning, and I'm looking for a re-entry point. I'm wondering what you think.
So the dust is the 3 times. This is the exact title is Direction Daily Gold Miners. Excuse me, and it's 3 times the bearish side. Let me just get the full title here. It's called ARCA Direction Daily Gold Miners 3 times bear. So I'm really pleased that you took your profits, but I'm going to talk about it in a moment. So if you don't mind holding on, we've got Tom in Plymouth, Massachusetts. We're going to look at dust to dust, and we will also look at the gold contract, and we'll talk about it and what are the possibilities. I'll be right back. How's that? 182, Basil Chapman, Tiger Technician Tower.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. We're back with Tom from Plymouth, Massachusetts. And so we're looking at the gold contract making high on the 2nd of May at, let me see, that was at 1306. And then it pulls back and it goes to trough A, trough B, leg C to the downside. I actually have a target of this trend line support, major trend line support. It actually was today. I'm going to be a little bit generous and give it a little bit more here. That could be tomorrow, but the key support has to be 1237. If it takes out 1237, then you've got almost like an arch formation that says the next level of support is 1228.50. Now you took your profits in dust. And dust is very interesting because it moves so quickly. Look at this. It's almost not DEST. What is DEST? Destination Maternity Core. Not at the moment, folks. So let's just do this. Dust. Gold miners. It's the high today. Did you get out almost at the open?
Yes, I got out at 1638. I mean.
Oh, that's fantastic. All right. So let's just do this. I believe that dust is now in play. And the play that we're looking at is that at 1464, it's down 75 cents. I would start looking at it again. I'm not sure the low of the day is 1454. The fact that it's pulled back so deeply is says to me that, and I've got the UUP in leg. It's holding very well. It's in leg C. Okay. Oh, I know what I'm going to do. I'm going to say to you, first of all, you have a really good feeling for this, probably better than I have because you got in perfectly. So I'm going to say to you, based on the 120-minute chart, the dust contract itself, because it moves so quickly, the key support would be the 120-minute chart, 1420 area is kind of support. I'm going to suggest you start a little position. It's at 1460. Do you do it right now or do you wait? I would wait just a little bit. I'd wait for about 2 hours or so. If gold, which is trading, if I can see the chart right now, if gold is trading now down 21, if it rallies to minus 19, then I'm going to say hold off and just put in a buy at about 1435, see if you get it. But I actually want to tell you something else, and it really relates to almost like what Scott was talking about a moment ago. I'm going to suggest that you have a very good feeling for this and that you should go a little bit with whatever techniques you're using. It might be better than mine because I'm looking at price points. I don't know exactly what you're looking at, but you're doing it very well. All I'm going to say to you is because you've been successful, don't overdo it. Use the same proportion of whatever the account is, whatever you've used here, do it again. Don't start increasing it just because you're doing well. So if anything, you could even decrease it a little bit, and as soon as it works, you could then increase it. So I'm just saying,
that's great advice, Basil. I definitely would not increase my position at this point.
Okay, great. So then all I'm going to say to you is the area that I think we're really close, the 1450 to 1440, I think is close. But if you really want a perfect position, one quick snap to the downside into the 1430s, just above 1420, grab it, and it must spring back immediately. If it holds there, I'd make my stop really tight because the dollar has done well, but it is ready on the 120-minute chart. It's really close to having a little bit of a digestive moment. So I hope that helps you.
Thank you very much, Basil. It does.
Thank you very much for calling, and good luck. Let me know how it goes. Tom in Plymouth. We'll be waiting. So let's go to Tim in Denver. Tim, how are you?
Thanks for taking my call, Basil. Thanks.
My pleasure.
I'm looking at SCO. It's the short
So this is the short side of oil, the ProShares Ultra Short Bloomberg Crude. Now, playing oil, and I really mean playing oil because this is a little different because the downtrend in oil, because this has got a whole political implication as far as I can see. I always look at oil as politics. I don't look at oil as a commodity vehicle. Now, I know that when I was listening to Andy Hector, he's got these fabulous ways of looking at the different, looking at oil at different months and the different categories, etc. But generally, I look at oil as politics. So I'm saying that my thinking here is that crude oil at some point in the next year is going to be a major catalyst for the market. So that's what I want to say on the one side. And that's to do with the oil-rich countries having to sell as much as possible because they've overspent, and that's going to create a real upside cap on crude. This is my thinking. Okay, so now we're looking at a shorter term, and the SCO is trading at 86.42 up 242. Are you in a trade or you?
I am in it, and I took some profit today, but I still have some.
Okay.
I'm kind of hoping to get a little bit more out of it.
So this is what I'm going to recommend. You've got a little bit, you've taken some off. I'm going to suggest, I would probably do it. Let me just look at this crude oil chart again. And remember, crude oil is really, things can happen overnight. You know, we've already had a couple of airplanes come down over the last couple of days. So things can happen. But crude oil looks to me like it wants to digest and it wants to get into the 46.30 to the 45.20 area. And that's in leg C in the weekly, which says, hey, at any point we could make some kind of a base to move up to leg D. But I think on your trade, you're in and out, right?
Yeah, I'm in it now, and I took some profit, but I am still in it.
So then I'm going to recommend that you keep your core position. Don't get too excited about adding to it. But I am going to say to you, if you ask me just fresh right now, where would I buy SCO based on my analysis of crude oil? I would say it's at 86.42. I would not like it to go below 85.30, but if it can just slip a little bit more between 85.30 to 86.30 to 86.20, somewhere around there, that's where I'd put back a little bit more. I wouldn't get too carried away right now, but I'll tell you what. If it starts to work for you and you've already put a little bit back in, and all of a sudden you're seeing it trade at 86.90 to 87.20, I would put a little bit more back in. I treat it as if it responds to my position correctly and starts to move higher. That's the time I would add. I would not add on a decline, though.
Yeah,
in other words, if it goes...
Oh, sorry, go ahead.
I just wanted to say I wouldn't want to get in. See, 84.80, about 84.80 is the 9-period moving average support in the 120-minute chart. This moves very quickly. So I would like to say to you, if you get in at the 86, I'd probably say closer to add a little bit, just above 86 to 85.90. That's kind of the area. I would not get too carried away, And I'd even say to you, if you have patience, now I know it happens overnight, which will make it very difficult, but if you have patience, I'd rather see you buying it moving up to the 86.30s than to try to grab it on the way down. That's all I'm saying.
Yeah, I'm kind of looking for a, like you have a pullback in oil, maybe 45, 46, which should rocket SCO up into the 90s.
Yeah, right. So if that's the case, then you can be adding on a little bit of a dip here, maybe just under 86, but keep a fairly tight stop. Hope that helps you, Tim.
Thanks, Basil.
Thank you very much. Folks, we'll be right back now. It's down 170. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Don't forget to listen to your swimming lesson. It's going to be very important. This is exactly the time that you want to get as much information as you can. I just did the crude oil chart and the 10-minute, the SCO chart on the 10-minute time frame for Tim. Tim, it's pulling back. It's at 85.98. I think I'm going to stick with my story. You might miss it because of overnight activity, but I'm really going to stick with my thing that I'd rather be looking at adding the position back on a little bit of a bounce. I don't want to be buying a falling knife. I don't want to, at this point, it's trying to fill the gap. But the most important thing I can tell you right now is if SCO in the 10-minute chart does not take at 85.80, that's the key support there after the gap up at 940. If it doesn't take that out in the next 3 10-minute bars, that's 30 minutes, but instead is able to turn around a little bit and get to the 80, no, that's too high. It won't even get there, to 86.29, just to kind of fill the candle that we're in right now. that'll be a much better sign. So I would give up a little bit of a profit because it's such a quick moving thing. It's real easy. Then look, as we're watching it, it's about to test that. So don't rush to get into you've made a nice profit. You got some core position. You'll be able to get back in. There's plenty of time for that. So I just wanted to follow through with that. Now, here's something really important to me. We had a call yesterday. I had a call about NVIDIA. And I said, the caller was short. And I said, I don't think that I would be looking at this as a short. In fact, I'm looking at more, I think it was Bill in Boston, I'd be looking at more as a long because of the action that it's just done. It looks to me like you could even be in leg B. It could be one of those things that's going against the market tide right now. And fund managers are going to look at it favorably. And it's only in leg C in the weekly chart. So what happened was yesterday, I believe it was yesterday, it closed well. It had a high it opened at round number 42, went to 43.85. The low was 42. And it's really important that today it went above yesterday's highs at 43.86. So I'm looking at this and I'm still saying I don't believe it's a short. And I said to him, take something off at least, please. I don't want you to be sitting with this losing capital. You can always buy it back, but you'll be buying it back with a lot less if you sit here and it goes to the 50, 45, 25 or so area. So I'm still sticking with that. It's trying to pull back a little bit. It's only down 17 cents. It's a real struggle for it to pull back. The technicals are looking great. I just wanted to follow up. I didn't get a call. I just said, hey, I want to look at that again. NVDA. Real quickly, OIH, yeah, it's pulling back. So I'm going to do this. I want to show you something here. This is my new webinar coming up in 2 weeks' time. Especially, I thought about the time sequence a lot. The consequences of a new market high. We haven't made a new market high. We're 700 or 800 points off the all-time high, but we've spent an entire year trying to get back, and yet we haven't broken down, but we haven't broken out. So what's going to happen? What is the trigger? I'm going to talk about different things that could be triggers for a new all-time high. Meantime, we are short number of positions. We are short the Dow. We have other positions as well. We did take profits on one of our shorts, took about almost 4%, about 3.7% profit on one of our positions in the auto parts area. We'll be going right back in very soon. We are still short. We went back to short the IBB. We've been short for 111 points and then added another 20 on the last move down. So as far as I'm concerned, there are sectors that are really weak, but there are sectors that are holding well. There are enough sectors and stocks that are holding well that are saying to me, these could well be clues. Let me just show you something right here. So go to the front page, check it out. The opening call subscriber-only event. Basil Chapman will be hosting a 90-minute live webinar with subscribers to his opening call newsletter on June the 2nd. 2 weeks from, perfect timing. 2 weeks from tonight. Sign up now for 30 days. If you get your subscription right now, you'll be participating with me. By the time we have it, you'll already know a lot more about the Chapman Wave and what we do. So in the meantime, back at the ranch, hold tight. This is only time that you've got right now to have a bounce in the market.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,